challenging. That's how Aspen's described its full year. The pharmaceuticals group has posted a 3% dip in revenue and a 42% decline in headline earnings per share. Aspen's pointed to high restructuring costs incurred in China, along with the impact of a contractual dispute in its manufacturing division. The firm's lowered its gross dividend by 41% to 211 cents. Woolworths has had a difficult year. The fashion retailer has posted a near 24% drop in annual headline earnings per share on a comparable basis. That's due to a weaker than expected performance from its Australian clothing chain Country Road. The firm's food business did, however, soften that blow as it delivered an above market performance. A final dividend of 81 cents has been declared. That's down 31% on the previous year's payout. Cahbuild delivered a solid annual performance despite a strained DIY market. The building materials retailer posted a 3% rise in revenue and a near 10% increase in headline earnings per share. Cahbuild says the results show positive growth trends, though margins were pressured by above-inflation cost increases. The firm's also highlighted a shift in customer mix with smaller basket sizes offset by more transactions. And while CEO Werner de Jager says consumer sentiment among lower-income households remains fragile, Cahbuild is cautiously optimistic about 2026, noting that group revenue in the 7 weeks since year-end is already 6% higher than the same period last year. Discovery has flagged high year-end profit. It expects headline earnings per share for the period to increase by up to 32%. The firm's seen a solid showing by its SA business. Discovery Bank turned profitable in the second half, and Discovery Invest's profit was boosted by an increase in the value of assets under management, along with certain one-off benefits internationally. Its Vitality units in the UK delivered strong growth, while Ping An Health in China held steady. Discovery is set to open its books next week. The Development Bank of Southern Africa has posted record annual profit and recorded growth of over 14% to 5.3 billion rand. That's despite a tough backdrop. It says that rise was supported by a solid increase in net interest income and positive fair value adjustments. Total assets increased just over 2.4% to nearly 121 billion rand. CEO Boitumelo Mosako says the balance sheet has grown slightly, but not at the level or ambition that the bank's working towards in terms of its strategy. She's added that the bank has room for growth with a strong liquidity and capital position. Shoprite is looking to capitalize on its huge client base and data points to disrupt the banking sector. CEO Peter Engelbrecht says the retailer is primed to offer banking solutions as it has recorded 1.2 billion customer visits in the year to end June. He added that the firm already has a bank account that it hasn't started marketing, and it's the only zero-cost bank account in the country. Engelbrecht says the plan is to enter the financial services area more aggressively. The RMB Business Confidence Index has slipped further by 1 point to 39 in the third quarter. This is 3 points below the long-term average level of 42. It implies that just over 60% of respondents are dissatisfied with prevailing business conditions. RMB says this points to an economy that is muddling through, and to address this, structural weaknesses need to be addressed. These include speeding up economic reforms in the logistics, water and local government sectors, alongside coherent messaging across public and private sectors. Further afield, the Eurozone economy expanded at a snail's pace in August as weaker services growth offset improved manufacturing output, despite the first rise in overall new orders since May last year. Here's more on this in this report.
The Eurozone kept expanding at a slow pace in August. That's according to figures in the closely watched Purchasing Managers' Index, or PMI. It found the bloc's weaker services growth offset improved manufacturing output. The reading inched up to 51 in August from 50.9 in July, just above the threshold separating growth from contraction. It marked a 12-month high but still indicated only modest growth. New orders across the economy increased for the first time since May last year, while domestic demand offset falling export orders, which declined at the fastest pace since March. Among the bloc's major economies, Germany's expansion slowed and France remained in contraction. An economist said political tensions and uncertainty around the EU-US trade deal were factors in what they called, quote, painfully slow growth. In a bright spot, manufacturing showed its strongest production increase in nearly 3.5 years. And overall, employment growth accelerated to a 14-month high, with services firms increasing headcount.
Meanwhile, Washington has reversed TSMC's fast-track status for U.S. chip manufacturing equipment exports to its main plant in China, a move that comes days after revocations of the same privilege for South Korean chip makers. Let's take a look.
The US revoked TSMC's fast-track export status for China. Taiwan's TSMC is the world's biggest contract chip manufacturer. It, like rivals Samsung and SK Hynix, have until now had exemptions to sweeping restrictions the US has imposed on chip-related exports to China. TSMC said the privilege will end December 31st. It means shipments of US chip-making tools to its main plant in Nanjing, China, after the date will require US export licenses. Washington doesn't want Beijing to benefit too much from its advanced technology. US President Donald Trump's administration has re-examined export controls it thought were too relaxed under President Biden. TSMC said it was evaluating the situation and communicating with the US government. It further added it remains committed to ensuring the uninterrupted operations of TSMC Nanjing. Taiwanese authorities also said they will continue to maintain close communication with the US and TSMC. While shares in SK Hynix and Samsung sank after their exemptions were revoked, TSMC shares were less affected and traded flat